Yeah, so good morning, everyone.
Good morning, sir.
Good morning, sir.
Good morning, sir.
Good morning, sir.
So we are done till essay 315. We're done till essay 315. We'll start with essay 320 now. Try to finish off with essay 300 series today. And then let's see, we'll discuss, if at all time permits, the test for essay, tests for professional ethics, right? So 320, materiality in planning and performing the audit, essay 320. Materiality in planning and performing the audit. Materiality, audit materiality. When do you require materiality in planning as well as in performing the audit? So you require this materiality concept both while planning the audit as well as while performing the audit. So planning, do you remember the essay 300, essay 300 planning? So what was essay 300 telling you is planning in an audit of planning and audit of financial statement. So planning and audit of financial statement, it required you to then further consider essay 315 and 330 also. And in 315 we understood what understanding the entity and its environment including its internal control to identify and assess the risk of ROMM, to identify and assess the risk of ROMM, right? So understanding the entity and its environment to identify understand the risk of ROMM, risk of material misstatement. So here material is there, materiality has to be considered for us to understand the risk of not just the misstatements but the risk of material misstatement, risk of material misstatement. So materiality has to be considered in planning as well as while performing the audit. This standard therefore deals with what auditor's responsibility to apply the concept of materiality both in planning as well as performing an audit. So when you are planning, you will assess how much will be my inherent risk, how much can I accept the control risk, right? And similarly, based on that, how much can I accept the detection risk? Based on that, you will perform your procedure. So planning is done accordingly as well as your performing an audit is done accordingly. 450 SA 450 explains how materiality is applied in evaluating the effect of identified misstatements. So SA 450, what does it tell? SA 450 tells that you have to evaluate the misstatements that you identify and you have to evaluate whether these misstatements are material or not. So if these misstatements are material, then you will have to resort back to the TCWG and tell them to correct the misstatements. You'll have to tell them that please correct these misstatements, and if not you will then accordingly modify your opinion. If at all you say, if at all you deem that this misstatement is material, however management has not rectified it, I have even gone to the TCWG and told them that management is not rectifying the material misstatements, then in that case, if I feel that the misstatement is material, then I can qualify the opinion as well. So that is what SA 450 also is getting linked, because there also I have to evaluate what evaluate whether misstatements are material, whether misstatements are material or not. And again, therefore, to evaluate whether it is material or not, what will come in handy is SA 320. Are we getting this? SA 320. So materiality in the context of the audit often will be discussed by the FRF itself. So often materiality will be discussed by the financial reporting framework. For example, to give you one glimpse, in schedule 3, in schedule 3 there is given something that for other income you will consider any item which is 1% of total income, which is more than equal to 1% of total income, then you will report it differently, then you will report it separately. Report means disclose it separately, right? If you want to disclose it separately as a line item in notes to accounts under other income, then also you'll have to disclose it if at all the item is 1% or more of total income. So that is how they give you the hint of materiality as well. So often it is given in the FRF, that is given in the financial reporting framework. Example, AS, Ind AS, or Schedule 3, whatever could be the example, but often it is discussed in the FRF itself. However, there can be cases where the materiality is not discussed in the FRF, and in that case, we have to assess the materiality based on our judgment, based on our assessment, based on our judgment, based on our assessment. And how do you exactly judge? How do you exactly assess what should be the materiality? That is what the guidance is given in here. The guidance is given here for 3 points, and again I believe it can be asked for you if they want to ask like the what kind of guidance you will take, or what generally the standards explain in case FRF do not discuss materiality in different terms. If FRF do not disclose materiality in different terms, generally the materiality will be then discussed in the standards on audit SA 320. And what does it say? That misstatements including omissions. So misstatement, always do not assume that misstatement means there should be a statement, then only there can be a misstatement. No, even if it is a omission of a material fact, then also it is called as omission. And if this misstatement are material, are deemed to be material, or are called material if they individually or when aggregated with other misstatements can influence the economic decisions of the users of financial statements. So if they either individually or in aggregate can influence the users' decisions, economic decisions of the users of the financial statement, those who will be reporting, those who will be reading the audit report. So in that case, you will be seeing what that misstatements could be material. This misstatement can be material misstatement. Similarly, there could be judgments about materiality which are made in the surrounding circumstances and might be affected by the size of the business or the nature of the business. So what do you think? The size of the business, if it is more, the size of the business is more, then materiality has to be determined accordingly, right? And similarly for the nature of misstatement, size of the misstatement, sorry, as well as the nature of misstatement, size of the misstatement and including the nature of misstatement. So if you, what do you think, which will be more material misstatement? The misstatement amounting to 2 crore or 1 lakh, which is a material misstatement? Obviously it's 2 crore, right? Similarly, which misstatement do you think is more material? Misstatement arising from normal transaction, and similarly misstatements arising from account estimate balance. What do you think? Yes, quickly tell me. We are seeing what misstatements could be affected by the size of misstatement as well as the nature of misstatement. Nature wise, what do you think? It could arise from normal transaction misstatements or misstatements which is arising from the provisioning or account estimate balance. Where do you think the misstatements is more material? The misstatement is more material.
Account estimate balances.
Account estimate balances, right? Because those are more susceptible to risk, and therefore that might be a more material misstatement for us. Similarly, judgments should be made about matters that are material to the users of the financial statement and are based on a consideration of the common financial information needs of the users as a group. That means what? Suppose Pooja wants me to assess accordingly based on the financial statement. According to her, the materiality could be are in and around 50 lakhs. However, for the group, I should consider not just according to the user, one particular user. However, group of users or entire users, in effectively entire users I should consider, or a group of users I should consider, not a particular individual user. I cannot be biased, or I cannot base my materiality or judgment according to a single user. It should be according to a group of users. So 3 points, again important 3 points. First one was what? Misstatements could be material if either individually or when aggregated with other misstatement is expected to influence the economic decisions of the users of financial statement. If they are influencing the economic decisions of the users of FS, then definitely those misstatements will be called as what? Material. Similarly, judgments have to be made in regard to size of materiality. Judgment have to be made in regard to nature of the misstatements, size of the misstatement, nature of the misstatement. And similarly, third one was what? Has to be based on common understanding, common financial information needs of the users as a group, and not based on the single user group. It has to be based on the common financial information needs of the users as a group. Are we clear with all the 3 points? Just go through that again. You should be able to recall all the 3 points. Yeah, so I'll repeat again. What was it? That if at all the FRF do not discuss about the materiality, If the FRF do not discuss, then this standard generally explains what that misstatements could you can deem that misstatement as material if either individually or when aggregated with other misstatement is expected to influence the economic decisions of the users as a group. Secondly, it was what judgment has to be made in light of current surroundings with respect to size of the misstatement and the nature of misstatements. And thirdly, judgment has to be made based on the common user needs, that is common financial information needs of the users as a group. Then they talk about the determination of materiality is a matter of professional judgment. Obviously it's a matter of professional judgment, right? That some for you materiality could be 1 cr, for me materiality could be 50 lakhs. So it is up to the auditor how he has to base the materiality. And we'll talk about details how the materiality is actually determined based on the financial statements, how the materiality is actually determined. The concept of materiality is applied by the auditor both, I told you, both planning as well as while performing the audit. And even when you're evaluating the misstatements, evaluating the effect of identified misstatement, this we particularly do where in SA 450. What is the effect of identified misstatements on the audit, and on the uncorrected misstatement what will happen if at all the misstatements has there and we feel that these misstatements are material? We, I told you what, tell the management to correct this misstatement, to rectify the misstatement. If at all they are not yet rectified, uncorrected, in that case also you have to evaluate the effect, what effect it has on our audit, right? And lastly, in planning, the audit the auditor makes judgment about the size of misstatements that will be considered material. The size means they will tell you about the certain figure they will tell that performance materiality is 1.5 cr, total materiality is suppose 2 cr. They'll give you this certain figures, right? Size of the misstatements. Generally, while planning the audit, auditor make judgment about this size of the misstatement, not accordingly judgment about the nature of misstatement. Generally, it is made regarding size, figurative figure terms, right? So, and then accordingly, this provides the basis for deciding your risk assessment procedure, how much risk assessment RAP you should perform. Similarly, identifying and assessing the ROM, that means what inherent risk and control risk. While assessing this also in RAP, you will then also perform the materiality. Perform materiality concept will be important. And similarly, determine the NTE of further audit procedure. It is very easy if you talk about this procedures in which the materiality is involved. In fact, it is involved everywhere in RAP, in FFE, in identifying and assessing the ROM. Now come to here, definition of performance materiality. Just read this once, and if anyone can explain it to me, please uh, explain it quickly. Performance materiality definition. Performance materiality means the amount or amounts set by the auditor at less than the materiality for the FS as a whole, at less than the materiality for the FS as a whole, to reduce to an appropriately low level the probability that the aggregate of uncorrected misstatement and aggregate of undetected misstatement exceeds materiality for the financial statements as a whole. Yes, what does it want to say? Anyone, please fast. What does it mean? PM means the amount or amounts which is set by the auditor at less than the materiality for the FS as a whole to reduce to an appropriately low level the probability. We want to reduce the probability that the aggregate of the uncorrected undetected misstatements exceeds the materiality for the FS as a whole. बोलो भाई. अरे what does it matter? It's going to be either right or wrong.
For example, if we place materiality at 1 lakh rupees, we will place performance materiality at 90,000 rupees. Now, if we find any misstatements which is corrected, which is detected and corrected, or sometimes we feel that they're not detected, amounts to 90,000 rupees, we feel that the probability that the mistake that there is a materiality of 1 lakh rupees, that is we feel that it will exceed 1 lakh rupees.
When do you feel that it will exceed 1 lakh rupees? That means what?
90,000.
Huh? 90,000 can exceed 1 lakh rupees.
It
If
90,000, that is performance materiality. We
huh?
feel that the statements, the financial statements are misstated, and it might be 1 lakh rupees, or it might exceed 1 lakh rupees.
But we are getting it at 90,000 na misstatements. When can it exceed 1 lakh rupees?
When undetected misstatements, we feel that they're not detected.
Undetected misstatement. Why do you feel that we have not detected those misstatements?
Maybe they're concealed. We feel that the management has concealed it.
Um, the reason not really that, but you can see the reason because of say sampling, right? The reason being it could be because of inherent limitations of audit, inherent limitations of audit, inherent limitations of internal controls. So because of this, are you going to perform 100% of the audit procedures? No, right? Are you going to perform your audit procedure to 100% of the items? No. For sampling, because of these inherent limitations, it might be a situation where you won't be actually be able to detect 100% of the misstatements. So you are creating a room for undetected misstatements. You are creating a room for undetected misstatements. Uh, suppose my total revenue was 200 CR. Total revenue was 200 crore. Therefore, I assessed my total materiality to be 2 crore. That is what? 1% of total revenue. That is 2 CR is my total materiality, TM. Now, I'll make what? I'll make certain room for undetected misstatements. Undetected misstatements. That means because of sampling, because of inherent limitation, I won't be applying the procedures to 100% of the item. This total materiality is for the 100% items of the financial statement. 100% of the items of the financial statement. This is what total materiality is for. However, am I applying audit procedure to the 100% of items of the FS? No. Wherever I am applying the my audit procedure to whatever ratio, I should detect, I should create a room for those undetected misstatement which I will be leaving anyway, because I am not at all even checking that. And therefore, after creation of that room for undetected misstatement, I'll get what? My performance maturity. Suppose I create a room of 70 lakhs. So my performance maturity is how much? 1.3 crore. 1.3 crore. And now it says that it should reduce the probability, the undetected misstatement, the 70 lakh that you decided, and even this 1.3 crore performance materiality that you decided, it should reduce the probability. It should reduce what probability? The probability that undetected misstatement when aggregated with this performance materiality, undetected misstatement when aggregated with this performance materiality exceeds 2 crore. That means what? Undetected misstatement should not be more than 70 lakh, what we have created a room for. That is what your performance materiality is. So you are creating a performance materiality at a level below the total materiality, so as to, in a hope or in a probability or in a likelihood that the aggregate of undetected and PM, aggregate of undetected and performance materiality will not exceed the total materiality for the financial statement as a whole. Everyone got it right? Any doubt? No. So then let's determine the materiality and performance materiality when you are actually planning the audit. So not when performing, but when planning the audit, you will then establish overall audit strategy, right? Do you remember planning? In the planning, we did overall audit strategy. Yes, Krupali, what was the answer for overall audit strategy factors the auditor will consider while deciding the overall audit strategy? Yesterday only we did.
Sir, please repeat the question.
Factors that the auditor will consider while deciding the overall audit strategy.
Not recalling, sir.
Not recalling. Do you remember that
Nature,
story?
timing, and extent.
Nature, timing, extent of.
Audit procedure.
Do you remember that story that preliminary engagement results came? and where I failed. So I took significant team effort. With significant team effort and with sorry, with extra effort and with all the resources, necessary resources, I will convert my CRO to engagement partner. Registration number 2, engagement partner. I'll get the membership number. No.
No, sir. Not able to revise.
Yes. Nikita. बोलो. हाँ.
The nature and extent of resources of planning and complexity.
Complexity.
C, we had CRO now.
C was characteristics of the engagement, na. Overall audit strategy, you are actually deciding the strategy, how are we going to perform the audit. So you need to know what is the characteristics of the engagement that you need to perform, right?
Then reporting objective.
Reporting objective. What is the objective for you to report to shareholder, to or any person or users of the audit report?
The knowledge gained by engagement partner
When?
previously in
In
the
previous
previous
audits.
audit.
Yeah.
And then
How we can get the benefit out of those knowledge.
and then engagement team efforts.
Engagement team, significant engagement team effort. What actually drives the engagement team's effort? And huh?
I can't recall.
One was also this na professional, uh, professional what I'm saying, preliminary engagement results. Do you remember preliminary engagement results? Preliminary engagement activities. Three activities. 3 points were there in preliminary engagement activity. What were those 3 points, Nikita? The 2 points were with respect to SA 220. One was with respect to SA 210. 220, 2 points, 210, 1 point. Preliminary engagement activities result. CRO के EP convert. Yes, that is okay. That Nikita told. But what was that preliminary engagement activity results? Pooja, revise करो भाई. Tell me the answer. Yeah, Krupali.
So establishing understanding terms of engagement 210, uh, 220 के लिए ethical requirement and independence,
Hmm.
and performing continuous process, client continuation
Performing
process.
procedure as required by SA 220, whether or not to accept or continue with the ongoing client or relationship, right?
Yes, sir.
Acceptance or continuance of the client relationship or engagement, whether the procedure has been performed in accordance with SA 220. Similarly, has the auditor complied with all the ethical relevant requirements as per SA 220, including independence requirement. And thirdly, whether the terms of engagement has been agreed upon in accordance with SA 210. So that is what they are also trying to say here. When you are establishing overall audit strategy, auditors should determine the materiality for the FS as a whole. So that is how you should also try to revise in between whenever you come across any point which you feel that you have in depth, or you have got the in depth knowledge in the previous sessions or in the previous standards or somewhere else. Then you should try to recall that first and then only move ahead. You should try to recall that first and then only you should move ahead. Before that, if at all you are not able to recall, then you should see, go back again, check it again, come back and then start. So that is how you tend to retain a lot. That is how you increase your retention power, by revising in between the important key points whenever it comes. So when establishing the overall audit strategy, the auditor will determine materiality for the FS as a whole. That means what? For the financial statement, as a whole, you are determining the materiality. That means for profit and loss, even for the balance sheet item, and even for the cash flows, everything. However, there could be certain items for which the materiality that you have decided will never be exceeded. That means what, the misstatements under these items will never be more than the misstatements which you have materiality, which you have identified or judged or made or determined in accordance with as per FS as a whole. So if suppose example, you determine materiality of 2 crore for the FS as a whole, but there are certain items which will, the misstatements of which will never cross even 1 CR. The misstatements of which will even not even cross 1 CR. And therefore, for those particular items of financial statement which could reasonably be affected, which could reasonably be expected to influence the economic decisions of users. Again, same point. If they are affecting the economic decisions of the users of FS, then definitely that should be material, and therefore we should determine the materiality for those items separately. We have to determine the materiality for those items, for those particular items for which misstatements of lesser amounts than the FS as a whole, and the FS as a whole less than that amount could expect it to be affect the economic decisions of the users of the FS. Then in that case, we have to determine the materiality level to be applied to those particular items also. Very important line. Please go through this once again, because this will be the first line when they ask you revision revision of or revision of materiality as and when the audit progress. That means what, you are during the course of the audit, when you are getting more or more audit evidences, when you are performing certain other audit procedures, you got to know about certain information, because of which you feel that materiality that you had decided, materiality you had decided is exceeding the limit what we should have decided. Had we known this fact earlier, we would not have gone with the same amount of materiality what we have decided. In fact, a lower level of materiality or higher level of materiality, whatever be it the changes, whatever be the revision, but had you known this earlier, had you known this fact earlier, you would not have generated the same, determined the same materiality. So before the revision answer, you will also have to write this answer. Please write it when I told you with respect to any answer. Just like I told you what the answer should include, you should also write it. So this is the first point for revision of materiality wala answer. That means what, when you are uh, doing the planning, when you are deciding upon the overall audit strategy, then you have to determine the materiality for the FS as a whole, and therefore even there could be a cases or there could be particular items for which the misstatements of lower level of materiality is expected but not exceeding the actual materiality that we have decided. So for those particular items for which misstatements of lower level of materiality is expected to affect the economic decisions of the users of FS, then for those particular items we should determine the materiality separately. And then auditor shall determine performance materiality. That means what, after creating room for what, for what, undetected
Detected
misstatements,
misstatements.
right, undetected misstatements due to inherent limitation of audit, due to sampling, or be it whatever reason, for the purpose of assessing the ROMM and determine the NT of RAP. Now straight away come to this here only, revision as the audit progress. That means what I told you, that auditor will have to revise his materiality level. Just after that point you will come to this point, because whenever they ask you the question on revision as the audit progress or revision of materiality when the audit progress, they in the suggested answer also write that point. First point is that, this is second point for this answer, and this will be your third point and then conclusion. So first point, remember what, just now what we did. For FS as a whole, we will determine, however, there could be misstatements of lower level of materiality that is expected to affect the economic decisions of the users of FS, and therefore in that particular case, we will have to determine the materiality level for those particular level of items as well. Now here they say that auditor will have to revise the materiality for the FS as a whole if in the event he becomes aware about certain information which he feels that had he knew this earlier, that that would have caused that, the fact that he got to know just now would have caused the auditor to determine different materiality. Different in the sense, not at the same level what we have determined right now, different than what we have determined initially. So that is what they say, in the event of becoming aware of information during the audit that would have caused the auditor to have determined the different amounts initially, and if the auditor concludes that the revision in the materiality is actually the lower materiality for the FS as a whole, that means what, lower materiality for the FS as a whole, that means what, now you are determining, earlier you had determined 2 crore, right? And then you gave room for 70 lakhs, and you did come and you arrived at what, 1.3 cr performance materiality. So total materiality was 2 cr, performance materiality was 1 crore. Performance materiality was how much? 1 crore, 1.3 crore. Now you felt that lower materiality for the FS as a whole is revised. Now we have revised the materiality, so now we have come to 1.5 cr as total materiality. And therefore similarly we will might have to revise the performance materiality also, don't you think? If we are reducing the total materiality, don't you think the performance materiality also might have to be revised, yes or no? That is what they say. That is what they say, whether it is necessary to revise the performance materiality. And when you revise the performance materiality, suppose you revised it and arrived at 1 cr, suppose you revise the performance materiality and you arrived at 1 cr, now you will see that whether our FAP that we have performed already, whether they have to be changed, whether the nature, timing, and extent of FAP that we have performed are appropriate, or we need to change the further audit procedures. Do we need to change performance materiality? So overall revision. If it is lower level of materiality, then we have to assess 2 points: whether PM needs to change, or secondly FAP still appropriate or not. Are we clear? Yes or no? Are we clear with this? So then come to use of benchmarks in determining materiality. Use of benchmarks in determining materiality. So like I told you, 1% of total revenue or 1% of turnover, you arrived at what? 2 crore 2 crore materiality. 2 crore materiality. So generally this turnover, what we call this turnover is benchmark. It could be turnover, it could be total revenue, it could be total assets, total liabilities, it could be equity. These benchmarks could vary based on the elements of the financial statement. What are the elements? Elements are asset, liability, income, expenditure, right? Revenue, total revenue, revenue from operations, total turnover. Those are what, these are what my benchmarks. And on these benchmarks I apply a percentage. On these benchmarks I apply a percentage and arrive at my materiality. So like on 200 cr I applied what, 1 percentage. At on 2 crore 200 crore I applied 1 percentage and arrived at 2 crore 2 crore materiality. Similarly asset size could be around, suppose 100 crore, and based on asset size I decide what, 10% of the asset size. 10% of the asset size. So according to me, the for assets or for balance sheet items, 10 crore could be materiality for the FS as a whole. That means for the balance sheet as a whole. Or suppose it's not 100 crore, but however it can be what, 50 crore asset size. So that is how you decide upon the materiality. That is how you decide upon the materiality. That is, you decide a benchmark, and on that benchmark you apply a percentage. So percentage wise I will generally recommend lower percentage, right? Yes or no? For lower percentage for revenue as compared to assets. So for asset generally it is 10% of total asset. For revenue it is generally 1% of total revenue. For profits it is generally 5% of the profit. So that is how you determine the materiality, applying the percentage on a benchmark. And benchmark could be that you have to decide which benchmark you need to take, which will depend upon certain factors. And that is how the question, that is why the question comes for 5 marks straight away. It will come again. Many a times it has come. The question is, what factors may affect the benchmark that you undertake, the benchmark that you choose? What factors do you consider before choosing the benchmark, or factors that may affect the identification of an appropriate benchmark? So what factors is actually affecting the identification of an appropriate benchmark? This includes what? This could relate to elements. I just now I told you that there are different types of elements. It could be asset, it could be liability, income, expenditure, revenue, revenue from operation, total turnover. It could be various elements of the financial statement. It will definitely depend on this point. What elements are there, and on what elements what percentage is generally applied. Now similarly, whether there are items on which the attestation or attention of the users of the entity's financial statement needs to be focused. So generally you will find those items like where the users tend to focus. Example, profitability, dividend amount. Generally users tend to focus on those particular amounts, right? Turnover, profitability. So in that case, for those particular amounts we have to determine the materiality for the FS as a whole. And accordingly check in regular intervals whether the materiality has been properly arrived at or not, whether the materiality is properly arrived at or not, or has it been arrived at all or not. And then the nature of the entity, particularly the nature, will affect the materiality. For example, tell me quickly, what do you think will you choose, what do you think will you choose, profit, turnover, or assets when the entity is in startup stage, recent seed stage, startup stage? Which figure will you choose as a benchmark? What factors will you consider? So factors, you will consider that it is a startup entity, it's in the early stage of its life cycle. So will you choose turnover or will you choose assets, total assets? Yeah. Hmm? Total what? T for revenue or
Assets, total assets.
everyone saying what? Assets, right? Why? Because we are not much we cannot much predict, right, revenue, how much it will have in the startup stage, how much profit it will generate out of the total revenue, how much total revenue will it be there. However, asset seems to be more stable as compared to revenue and profit in the case of early life cycle of the entity. Similarly, entities ownership structure, quickly tell me, if debt to equity ratio is 4 is to 1 in one entity X limited, and in Y limited it is 1 is to 1, in Y limited it is 1 is to 1. So in which entity are you going to see profit as a benchmark, and in which entity are you going to see assets as a benchmark, or liabilities, assets? Which entity do you think you will be seeing assets or liabilities of the entity as a benchmark, X limited or Y limited? Quickly tell me. Ownership structure. Ownership structure, the way it is financed, debt rather than equity or equity rather than debt. X limited, Dhanlakshmi is saying X limited, right? Correct only, Dhanlakshmi.
Excellent.
Why? Because we are more concerned with the refinancing, or we are more concerned with our repayment of the debt amount which we have given, right? The interest part or everything else is secondary. Okay, fine, we will generate the interest income. However, for this particular item, we are more conscious about the repayment itself. Even if we are paying 100 to you, I'm giving a loan of 100 to you, I want at least 100 back, right? So for that matter, I'll see your liquidity position, your funding position, your assets, everything, and for that matter, I'll consider assets as a benchmark, not revenue or total turnover. Similarly, relative volatility of the benchmark, if the turnover is not that volatile, if assets are more volatile, or vice versa, accordingly we will decide upon the materiality for the FS. So everyone got the benchmark point. I hope everyone got the benchmark. It's very easy also to remember. It's all naive. So naive for n, from n it is what? Nature of the entity. From n it is what? Nature of the entity. From a is what? AI is what? Attention, attentive items, or you can say at what? Attentive items, which needs to be brought to into the attention of the users of FS. And then V, for V we will call what? Volatility, right? And from E it is what? Elements of FS. That means asset, liability, income, expenditure, be it whatever the elements. I hope everyone is clear with all these 5 points and are also able to retain. See, each and after each and every topic, we are spending a time for you to revise, for you to read it, right? I for AI, then Lakshmi, AI is for attentive item, attentive items of the financial statement. Attentive item, AI, attentive item. See, I marked also here if you are having this book. Attentive item, attention item, attentive items which requires attention in the users of the financial statement. So what was I saying, that we are spending a bit more time as compared to other sections or other sessions, where I used to do what? Each and every topic I used to understand, we used to clear, I used to tell the trick or so to learn, and then we used to move forward. But after this, I'm also giving you some time, so make sure you utilize those time, and could also be our reason for taking a bit more time as compared to what we have targeted. I hope it's clear. Now
Yes,
let's
sir.
come to audit planning and materiality. Now quickly tell me, what do you feel? Ramam and materiality. What is the relationship? Or if not Ramam, let's suppose audit risk. Relationship between audit risk and materiality. Direct
Directly
relationship?
proportional.
Huh?
Directly proportional.
Directly proportional. That means what you are saying, that if audit risk increases, I will increase my materiality level. That is what you want to say, right?
नो सर, इट वुड बी इनवर्स ना। मतलब अगर जैसे ऑडिट रिस्क हमारा बढ़ता है तो हम जितना मोर्टेलिटी का लेवल कम रखेंगे उतने ज्यादा रिस्क पकड़ाएंगे ना।
Right. So there is always a inverse relationship between audit risk and materiality. So if at all your audit risk is more, then you will reduce the materiality. Then you will reduce the materiality from 2 crore say 1 crore, suppose example. And now instead earlier what used to happen was misstatement more than 2 crore only were paid attention to. But now however, even the misstatement which is in between 1 cr and 2 cr will also be paid attention to and address accordingly. Earlier, we used to ignore misstatements which is less than 2 CR. We used to ignore that. But now we will do what? We'll also include those mistakes which is falling within 1 CR and 2 CR. So for audit risk, if at all it is lower, if an audit risk is more, then materiality will be reduced. Materiality will have to be reduced. Clear? Similarly, auditors' preliminary assessment of materiality related to specific account balance and COT class of transaction helps the auditor decide on questions at what items to examine and whether to use sampling and analytical procedures. So preliminary you will assess the materiality and then you will decide what, whether we should do the analytical procedures or not, or use the sampling or not. And if at all, even if the sampling, if the materiality is very less or you are getting material misstatements a lot, then you might have to increase the population size, or sorry, sampling size in the population. Then it enables the auditor to select the audit procedures with a low degree of audit risk. And lastly, auditor assessment of materiality and audit risk may be different at the time of initially planning of the audit as against at the time of evaluating the results of the audit procedure. That means what? Initially, when you planned the audit, you might have arrived at an amount of materiality which might be different when you significantly start performing the audit. So during the course of the audit, the materiality might have to revise. That is what even we saw at that point of time, right? In the case of topic revision of audit materiality, revision of materiality, remember? So that is what they are saying, that the amount of materiality that you set initially could be revised in the future when you, as and when you perform the audit during the course of the audit. So we are done with what, essay 320. Now let's start with essay 330. If you want to give it a read once, give it this question a chance. It's very easy question only. Are you doing the question or not along with the standard? Are you revising and also doing the questions? I'm not getting any doubt on any question. Please go through the questions also. More than the standards, more than the topic, you will understand based on the questions solved. Once you start solving the questions, you will tend to have a grip then on the subject particularly. More importantly, if you have that grip over standards, then you are through with the audit.
So one request, sir, whenever you are working some notes like for clearing to some concept, uh, uh, in that time, can you sir hold for a second, because otherwise it will help in future. Otherwise, you have to see a video and make the note of it. And so
Okay,
whenever,
okay.
yeah.
You can tell me to stop. In case I move ahead, then you can just tell me to quickly go through that again. Chalo, let's start with essay 330 now. SA 330 auditors responses to assess the risk. Do you remember this? Responses to assess the risk. Which risk are they talking about? Which risk? Assess the risk. Which risk?
Credit risk, that is we get after ROMM, and also fraud risk according to
It's ROMM
what
only,
you.
na? As per SA 315, I told you we have to understand the entity. Yeah, Kapil, ROMM. Understand the entity and its environment to identify and assess the risk of material misstatement. What was SA 315 name? Understanding the entity and its environment to identify and assess the risk of material misstatements. Sorry, identification and assessment of risk of material misstatement through understanding the entity, its environment, including its internal control. So under 315 we assess ROMM, and now this ROMM will have to be discussed and assessed, or response what we need to do for this ROMM we will do here in SA 330. Response, what do you mean by response? We'll perform further audit procedure. We'll have our audit procedures so that our detection risk is lower, and if detection risk is lower, our overall audit risk will be at a par level, right? So overall audit risk should be, if I suppose overall audit risk is at should be at this level, then materiality is at only above the average level. Materiality means what? Sorry, ROMM, risk of material misstatement. ROMM is above than the average level or above than the average audit risk. Then we have to reduce the detection risk so that the overall audit risk is lower, or as compared to that, overall audit risk is acceptable. So auditor has to design and perform further audit procedure whose NT are based and are responsive to assess ROMM at the assertion level. And therefore, in designing the FAP, the auditor shall do what? Consider the likelihood of material misstatements. Likelihood of material misstatement is what? All these material misstatement that we have imagined, we have foresee, what is the likelihood that this will actually happen due to the characteristics of the relevant class of transaction, relevant account balance or disclosure level, and whether the risk assessment takes into account the relevant controls also. The controls, because you'll see what we are here seeing, what in the further audit procedure we are particularly responding to the assessed ROMM, right? We are particularly responding to the ROMM that we have already assessed in SA 315. We have assessed ROMM in SA 315. Here we are responding to those assessed ROMM. Now, while designing the FAP, we shall check that the material misstatement which is there in the ROMM, risk of material misstatement, it comprises of what? It comprises of inherent risk and control risk. Inherent risk and control risk. So here also they are telling you what? Check whether the misstatement is due to characteristics of the class of transaction, account balance, disclosure. More importantly, it is relating to the entity, its environment, internal control, and therefore we are here seeing what? Inherent risk. Similarly, we also have to see what? Control risk, and therefore we'll see what? For us to identify control risk, we generally see that whether the controls are adequate enough to mitigate the inherent risk. If they are mitigating the inherent risk to an acceptable low level, then we'll see that there is no control risk. If the internal controls are able to mitigate the inherent risk to an acceptable low level, then we'll consider zero in a control risk. However, it cannot reduce to an acceptable it cannot eliminate it. In fact, I can say that it cannot eliminate the inherent risk at all. So an inherent risk will be there, and for that matter will implement internal controls. However, there will be control risk also, which the internal controls will fail to detect the misstatements. And that is what they are saying, that whether have we considered all this inherent risk control risk, and obtain more persuasive audit evidence than higher the auditor's assessment of risk. So if you are assessing the ROMM, risk of material misstatement, higher is your higher, then what do you think? Your sufficient appropriate audit evidence, will it improve? Will it increase? If the audit risk is at high level, then will you increase the persuasive audit evidences that you are obtaining from the client? Yes or no? बोलो भाई, सिंपल तो है. Yes. If my audit risk is more, then definitely I'll increase my number of audit evidences, quality of audit evidences. In effect, sufficiency and appropriateness of audit evidence then has to be more than the par. Now let's come to types of further audit procedure. I have already told you. Can anyone quickly tell me what are the types of further audit procedures? Bolo. बोलो बोलो बोलो. Further audit procedures. TOC and substantive audit procedure. Correct, only right. So compliance procedure, which we call as test of control, and substantive procedure. Now in substantive procedure also there can be two types. It is what analytical procedure and test of details of transaction. So that is what here they want to say, test of control and substantive procedure. And in that there is test of detail and substantial analytical procedure. TOD and AP, correct, Kapil. Now go through till here. Go through this step 1. Just go through this once and then tell me what do you infer. Yes, gone through this test of control.
Sir, in the first line, that controls are operating effectively or are not operating effectively.
They say that auditor shall design and perform TOC when he expects that the controls are operating effectively. So what do you think will perform TOC when we expect that okay, controls are operating effectively, but let me check whether or not they are actually operating effectively. That means what? uh, Suppose I want to take an example. I want to tell you that I know that okay, you can play cricket effectively, you can play cricket, but I want to check na, but I want to test whether you can actually play or not. So that is why they are saying that we will design or will test the test of control only when we expect that yes, they are operating effectively. If we already expect that they won't be operating effectively, then why will we even waste our time in testing them? We straight away declare the controls are non-effective, right? So if we expect that they are effective, then we'll test the controls and see whether they are actually operating effectively or not. Or when you see that substantive procedure alone cannot provide you with all the sufficient appropriate audit evidences. That means what? SA, substantive audit procedure, is alone is not sufficient. You have to perform TOC. Yesterday we saw one example. Do you remember Reliance Smart versus normal Kirana store? Reliance Smart versus normal provisional stores. So in their substantive procedure alone will not be able to provide you with all the sufficient appropriate audit evidences at the assertion level in the Reliance Smart. In the Reliance Smart, you will have to resort to the testing of internal controls. ठीक है अर्नब?
Yes, sir. Sir, in RAP, we are just assessing that whether control are efficient to mitigate the risk, and here we are just supposed to test that whether that is
Yeah.
working.
In risk assessment procedure, we see that there is any control risk, but it means what? The controls are there, we know, but are they adequate enough to mitigate the risk? They should be relevant also. Na? Controls is not just the way put the controls. It should be controls relevant to the size of the entity, relevant to the nature of the entity. It should be able to mitigate the controls. And once we are sure that yes, the controls are there definitely, and we expect that they are operating effectively, we will then test the controls to actually assess whether they are implemented or operating effectively, accurately or not. Timing could be throughout the period of the audit, or as at a particular point of time. It could be different for different amount of different set of controls. So one control could be for the entire period. That means it should be applicable or it should be operating throughout the audit. Then you can check the that control throughout the period of audit. But at some point where there could be certain controls which is relevant only as at a point of time. Now using audit evidence obtained during the interim period, using audit evidence or that you have obtained during an interim period, that means what are they wanting you to infer from this interim period? You obtained the audit evidences, you came for suppose 4 months period have already lapsed, and after that you came and you audited for 4 months period. You audited for 4 month period where you also obtain audit evidences with respect to controls. You tested the controls for these 4 months, you documented the same, and now you came back again after few months, and now you want to consider whether there is any significant changes to those controls. Why? Because you can either use the testing evidences from those period, from that period which you have already tested. So you want to check whether there is any significant changes in the controls that you have already tested during an interim period, and determine the additional evidences that you might need to take for the remaining period. So when you have come for the remaining 8 months after completion of the audit, or for 4 months you have completed it, now after coming it for next 8 months, you have to consider whether I need any additional audit evidences for the remaining period. And that is what they are also want to say. Relevant factors in determining what additional audit evidence to obtain about controls that were operating during the period remaining after interim period will include. That means what the question, important line here is factors in affect determining additional audit evidences to obtain. Factors in determining additional audit evidences to obtain about controls that were operating during the period or remaining after interim period. This will include significance of assessed ROMM at assertion level. That means how much important it is, how much risk of material misstatement, how much important it is. Similarly, specific control that were tested during interim period, but there are certain significant changes which are made in the process, or which were made in the internal controls. So there are certain changes which are made in the internal control, and for that matter we also need to do. Therefore again, additional audit evidences have to be obtained for the remaining period, because there are changes to what we have already tested. Similarly, the degree to which audit evidence about the operating effectiveness of control was obtained, the degree of confidence, the degree of comfortness on the audit evidence, that is what they want to say. Length of remaining period, how much remaining period is there left with you, and then extent to which auditor intends to reduce substantive procedure based on reliance of controls. That means what, auditor does not want to do the TOD or SAP in detail. He wants to rely more on TOC and reduce his substantive procedures. He wants to reduce his substantive procedure by comprehensively checking what test of controls. And therefore, in that case, in additional period or in remaining period, we might have to generate new additional audit evidences as well, because we want to perform the TOC at its fullest. We want to perform TOC at its fullest, so that we are performing less substantive procedure. And for that matter, we might be requiring with additional audit evidences in the remaining period. And lastly, the control environment that sets the tone of the entity, right? So control environment should be good, should be bad, whatever be the case. In that particular case, you might have to increase the additional audit evidence or decrease the additional audit evidences, whatever be the case, because of control environment. So how do we learn this answer? So see, you can learn like this. If you want, we can try to recollect next time from this trick. That is ROMM. There are changes in ROMM. There are changes in ROMM. So now we will calculate the degree. Therefore, compute degree wise. How much change is there? Degree of change, suppose. We'll compute the degree, and then we'll also calculate the length of that change, or length of the remaining period, or length of the ROMM. And then we will what do? We'll reduce this length, reduce the length and degree to control ROMM, or whatever, to control the situation, so we want not too big or too lengthy or higher degree of ROMM. Therefore we'll compute degree wise. We'll check the length, what is the length, and then we'll reduce the length and degree to control accordingly, to control. So ROMM we have point what, from each point we'll have a 1 point. ROMM we have point of significance of assessed ROMM. Then changes, what point is there? There is a significant changes in the internal control that you have already checked, changes in the controls that you have already checked. Then compute the degree. So degree of audit evidences that you will obtain, degree to which audit evidence about operating effectiveness of control was obtained. And then also you have to calculate the length wise, so length of the remaining period. Then I told you what, we'll reduce. So reduce what? We have to reduce substantive procedure. In case suppose we have to reduce the substantive procedure, then in that particular case we might have to increase our TOC, and to increase the TOC in the remaining period we might have to take additional audit evidences. I told you this answer, right? So we have to reduce SAP. I want to reduce SAP, substantive audit procedure. For that matter, I might have to incur additional audit procedure to obtain additional audit evidences during the interim period. And lastly, to control this entire maniac, and to control means what? Control environment. ठीक है. Now what do you think? In the last year also you had performed the audit. In the last year also you tested the internal controls. Can you use those audit evidences which you used in your testing of internal control last year as a valid base for the current year? What do you think? What's your answer? Can you use the audit evidences that you obtained in the last year to test the internal controls? Can you use the same evidences for the current year and say that okay, the last year audit evidences has been obtained, clearly the TOC was operating effectively, test of control was confirmed, and controls were operating effectively, and therefore we might not be testing for this year. For the current year we are not going to perform. Are you going to are you getting the question or not? So tell me, whether do you think the controls, if tested accordingly in the last year previous audit, whether it needs to be again get the audit evidences for the purpose of testing of internal control if we have done the testing in the last year only? What do you think?
No, sir, we have to perform it again na, for the current year.
But if it's same only, then the controls are more or less same.
Then not required. But if controls
So
have
that is
been
what
changed or
you should say,
something,
like if there are no such significant changes in the internal controls from the last year, then you can rely on the evidences that you obtained during the last period. Depend on the significant changes in internal control. Correct, Lakshmi? Correct, Lakshmi? And that is what here they are also saying, you shall establish the continuing relevance of that evidence by obtaining audit evidence about whether there are any significant changes in those controls which have occurred subsequent to the previous audit. And yes, if there are changes, then yes, definitely you should test the current audit. Even if there are not such a major changes or significant changes, still you should test the controls at third year. That means at every third year, thrice, at least once in every third audit, and shall test some controls in all periods. That means what? Once in every 3 years, test all the controls, all the controls, and every year test some controls, some. Clear? Now what factors will warrant you to retest the controls? That means what factors will tell you that no, you shall not rely on the audit evidences from the last year, previous period, previous audit. You have to retest the controls. You have to perform the test of controls again. So these have come for a multiple time RTP November 18, MTP, and other attempt also in even in RTP May 22. So it says that if there at all is a deficiency in control environment, then you should again retest the controls. Deficient control environment. Similarly, deficient monitoring of controls. If the controls are not being properly monitored, can you say that yes, controls will still be operating effectively as compared to last year? So if it is not monitored, then the chances are there that they might not be operating effectively. Yes or no, right? So monitoring has to be checked whether there is any deficiency in the monitoring of controls. Similarly, deficient general IT controls. General IT control has to be sufficient. Deficient general IT controls. Deficient general IT controls. If the general IT controls itself are not sufficient, then definitely you need to test all the other control, because these general IT controls are like the pillar of all the controls, like the pillar for all the controls, foundation for all the controls. It, you can say it is like it's a server where all the other controls are operated. So general IT control, you can relate it to server base. So generally the controls with respect to the server, or the control with respect to the entity as a whole. For example, whistleblower policy. These are all what general IT controls. If these are falling deficient, then definitely you need to retest all the controls. a significant manual element to the relevant controls. That means what yesterday also I told, that wherever the controls are automated, then there should be minimum or lowest manual intervention, because the machineries or the AI or the updated technology, whatever you can call, generally tends to not to make a mistake unless there is certain human intervention. And that is why they are saying that if there at all there is a significant manual element involved in the relevant controls, then it should retest the controls. Personal changes that significantly affect the application of the control. There are certain changes in the employee of the entity who used to manage those controls, right? There are changes in, suppose, KMP, key managerial person of the entity. KMP changes, director changes, BOD composition change, CEO change, CFO change, or any other employee change, MD changed. Then in that case also you need to retest the controls again. And lastly, any changing circumstances that indicate the for changes in the internal control. So let's just try to learn this. You can say from the deficient we have 3 points. Deficient. What deficient? General IT control. Yes. Similarly, deficient control environment, and one more deficient
Monitoring of control.
monitoring of controls. Plus, you can relate to this if you have seen this video. Have you all seen this video? Yes. So you can relate to this. लोग बदल गए means what? Personal changes. हालात means what? Circumstances changes. And there was a significant manual element involved. So this manual element was involved. ओ भाई, एकदम से लोग बदल गए. If not, then you can have something for these 3 points. ठीक है, important, very very important question. Now let's come to evaluating the operating effectiveness of controls. They tell you that you shall always look out for the misstatements that may arise in the internal controls because of the internal controls, which may reflect what the controls are not operating effectively. So you should always look out for those misstatements, whether misstatements have been detected, and if yes, whether they indicate that the controls are not operating effectively. So even if there are no identified misstatements, that means what? There are no misstatements identified which indicates internal controls deficiency. Even then you cannot call that the controls are effective. You have to test the controls properly. Then you can say the controls are effective. If you do not find any misstatements which indicate that the controls are deficient, you cannot simply rely that okay, we did not find any deficiency in the internal controls because we did not find any material misstatements which indicate a deficiency in the internal controls. So controls may not be effective, still the control has to be tested, and the auditor will communicate material weakness in the internal control after testing, of course, identified during the audit on a timely basis to management at an appropriate level and TCWG according to SA 265.
So could you please explain the second point?
Second point is they are saying that suppose firstly they said what, you have to always look out for misstatements which indicate there is a deficiency in internal controls. That means they are not operating effectively. However, suppose you are not able to find any such misstatements, no such misstatements you have found which indicate a controls that controls are not operating effectively, but just based on this fact you cannot conclude that the controls are effective. Just based on the fact that you have not found any misstatements which indicate that, you cannot conclude that the controls are effective. You have to test the controls, then only you can comment whether the controls are effective or not. Just because you did not find any misstatement, it does not mean that controls are effective. That is what they want to say, Right only, right? Correct. Now very important, mark this as probable future question, can be asked in any attempt. Very important. Matters the auditor will consider in determining the extent of test of control. Extent, what do you mean by extent? What do you mean by extent? Depth, in depth, or the, you can say what, how much audit evidence I should obtain, or how much sampling I should consider. So sampling amount should be how much. Similarly, how much audit evidences I should obtain with regard to the testing of internal controls. And then we will determine this according to the matters which is stated below. First one is being the frequency of the performance of control. Example, I'll give you one example. Like in L&T, we used to have what, recom is what, risk assessment control matrix. So there we used to have what, the procedure or the process used to be mentioned here. Suppose P2P entire process is mentioned, then the controls with respect to this process, what is the controls with the process for P2P, what are the controls, and then the controls, the frequency we used to state, how much frequency is it of that control in the entire year. So for example, P2P, the frequency, for example, like tax audit. So direct tax could be one process. In that there could be another sub process of tax audit, and that tax audit the control is what, maker checker. One example I am telling you, maker checker. So the person who is making 3CD shall not check the 3CD, shall not check the 3CD, and that is one of the control. Now suppose this control, what do you think is the frequency of this control throughout the year? Quickly tell me, what do you think is the frequency of the this control throughout the year? Frequency means what? How many times are you performing this particular control? How many times, number of times you are performing the internal control, this internal control? What do you think is the frequency of this particular control which I just told you? अरे बोलो, 1 2 3 4 5 10 12 52. What? 1? Anyone? Everyone? 1 only, right? Frequency will be 1. Frequency for the control which is stated that the direct tax audit report which is in form 3CD, there should be a maker and SOD between maker checker. There should be maker checker, there should be segregation of duties, this falna dikna. There are so many controls with respect to this direct tax process. However, these controls are to be performed single, once in a year. So frequency is what, my 1. So based on the frequency of the controls, you will decide upon how much in-depthness you are going to perform the testing. So if at all it is only 1, then you'll get all the samples, right? You'll check in detail, everything has to be checked. If only 1 has to be checked, if that was only 1 throughout the period of audit, it is only 1. Similarly, in if suppose the frequency is 4, that means quarterly return. Example, TDS return. So TDS return, the controls with respect to TDS return, the frequency will be what? 4. The controls with respect to TDS return, whether the TDS amount has been paid accordingly, that amount that is paid is been checked accordingly, maker checker, the statements prepared, who has prepared the statement, whether the form is filed or not, all this requirement is quarterly. So here also I can take 1 as a sample. This 1 as a sample is not something which I am doing it on my own. This is also provided by the guidance note of ICI, guidance note on ICOFR, internal controls over financial reporting. ICOFR, internal controls over financial reporting, which you'll also study in company audit. But guidance note on ICOFR clearly tells you if the frequency is 1, you can select 1 as a sample size. If it is 4, you can select as 1 as a sample size. Even if it is 2, that is half yearly controls, you can select 1 as a sample size. Then if it is monthly 12, then you can select 3 or 2 as a sample size. Then if it is weekly, that is 52 times in a year, then you can select 6 to 7, something like that. They have given this entire guidance on how many samples you should pick up. That is why we are calling it what, frequency of the controls that is going to be performed. The controls, are they going to be annual controls, semi-annual controls, quarterly controls, weekly controls, monthly controls? What is the frequency of the controls? If the frequency is more, the extent will be more, the in-depthness will be more. Similarly, length of time. What is the length of time, the period during which the control is active, implemented effectively? That you will see, and accordingly you will have to check what, how much how much in depth or extent of test of control should be performed. Similarly, expected rate of deviation. If you already expect that there will be a deviation from the expectation, then definitely you should be increasing your extent of test of control, right? And lastly, the relevance and reliability. If you feel that the controls are relevant to me, are reliable to me, then your extent might reduce. But if you feel that the comfort factor is not coming out, there is no comfort in the relevant internal controls which is being there, then we can say what, extent of test of control has to be increased. So okay, again one more rep, we will try to learn this with one more rep. Come with me. Frequency, length of time, rate of deviation, relevance and reliability, relevance and reliability. Frequency, length of time, rate of deviation, relevance and reliability, relevance and reliability. Frequency, length of time, rate of deviation, relevance and reliability. I hope everyone is clear with all the 4 points as well as have learned our rep. Second rep. What was the first rep? Do you remember first rep? Yes, Dhanlakshmi. What was the first rep that we came across day before yesterday? Dhanlakshmi. Kapil is correct. Bolo bolo. Kapil. Engagement, management, establishment requirement, ownership FRF reporting requirement. Ownership FRF reporting requirement. Engagement, management, establishment requirement, ownership FRF reporting requirement. Similarly here, frequency, length of time, frequency, length of time, rate of deviation, relevance and reliability. Now comes step 2, external confirmation including substantive procedures. So now we are done with what, TOC. Now in the further audit procedure we also have what, substantive audit procedure. Now in substantive audit procedure we divide it into TOD and analytical procedure. So that is what they are saying. The auditor's assessment of risk is judgmental and so may not identify all the risk of material misstatement. Obviously, we will not be able to identify all the risk. It's not an 100% assurance. We are applying sampling techniques. There are inherent limitations of audit, inherent limitation of internal control, everything. So for that matter, we will not be able to identify all the misstatement. Yes, that's true. Because there are inherent limitation to internal control, including management can also override certain times. Depending on the circumstances, auditor shall determine that either you can perform only substantive audit procedures, either you can perform only substantive analytical procedure, sorry, analytical procedure. So substantive procedure, in the substantive procedure, either you can perform only analytical procedure or you can perform only TOD. Either you can perform only substantive audit procedure or you can perform only TOD, or you can perform a combination of both. Yes, clear till now? Any doubt? Now come to last question of this standard, external confirmation procedure as a substantive audit procedure. So generally when this question came in December 2021, December 21 exam question, this was the exam question for December 21. When this question came, most of the student went to SA 505, external confirmation. However, they are saying specifically that external confirmation to be used as a substantive audit procedure, to be used as substantive procedure. So factors that may assist the auditor in determining that yes, you can use external confirmation procedure or to be external confirmation performed as a substantive procedure. So what all factors will include this confirmation can be used, external confirmation can be used as substantive audit procedure. So first point being confirming parties knowledge of the subject matter. That means what, yes, you can rely on the external confirmation if the सामने वाली जो party है, the confirming party's knowledge of the subject matter is there. Responses may be more reliable than whatever response you will receive. You will tend to be reliable, you will tend to rely more on those responses which you are receiving from the confirming party's knowledge of the subject matter. If they are already aware about what the context is, they are not just blindly signing and sending you back the responses of the external confirmation. They are not doing that blindly. They are signing only after reading that yes, okay, they will be checking with the books, and that is what they want. Key confirming party's knowledge of the subject matter. Similarly, ability or willingness of the intended confirming party to respond. For example, the confirming party may not accept the responsibility for responding to a confirmation request. So suppose Nikita, what what happened is, external confirmation party, if I send to Nikita, Nikita is very like kind of lethargic and lazy, and she is saying that okay sir, don't worry, I will not be sending you with, or even I won't be even seeing any external confirmation that you send. No point of confirming, it's very useless. So let's leave that. So we may not accept the responsibility for responding. Nikita is not accepting the responsibility. Similarly, may consider responding too costly or time consuming. You can also think like okay, it will again charge me, you can charge me with stamp charges, or post office charges, or whatever it be, parcel charges. Similarly, may have concerns about potential legal liability it might have. Again, if you are responding, then you are binding yourself to that response. Are you getting this? Suppose Nikita owed me 2 crore. Nikita owed me 2 crore. Now she gave me an external confirmation in which she, instead of 2 crore, mentioned 2 lakh. Instead of 2 crore mentioned 2 lakh, or instead of 2 crore mentioned 1 crore, suppose. Now I confirmed and sent back to the Nikita, and now later on I was telling that when I confirmed that time you didn't tell anything. At that time only you should have pointed this point. If it is 2 crore, then you would not have sent me the confirmation request of 1 crore, right? So confirmation request of 1 crore means what? Now I will be paying only 1 crore. So therefore there can be a situation which can arise, which could lead to legal enforcement as well in the case of external confirmation. And secondly, may account for transaction in different currencies. Definitely. So there could be exchange revaluation, like the case which happened now in Sri Lanka. The dollar price went from 220 to 380. $1 equals to LKR 220. It went to 380. So due to immense inflation, hyperinflation, the dollar price skyrocketed, and therefore in that case there could be a material loss, M2M losses, material losses. Account for transaction in different currencies. Similarly, may operate in an environment where responding to confirmation request is not a significant aspect of day-to-day operation. That means what? Nikita doesn't feel like to respond because it's not a their day-to-day operation, significant aspect of their day-to-day operation. Clear, everyone? And lastly, the third point is with respect to the objectivity of the intended confirming party. That means Nikita should be unbiased, should be objective enough while responding. Objectivity of the confirming party. If all these 3 points have you considered, then you can think of external confirmation making it a substantive audit procedure also. Are we clear? What happened, Dhanlakshmi? You are coming and going back and forth again and again. Again, no one. How many have you gone through the questions? Sagar, okay, the class is going to be almost over. We'll check with the test, professional ethics test, and then we'll finish off. Yeah, how many have you not gone through the questions till now? Yes. So come to test. Let's discuss. Everyone gave the test, or is there anyone who hasn't given?